My chat. All right, let's see how we gonna do this more. Let's let's see how we gonna do this. All right, I'm on YouTube. All right, so now let's see if I can go live on Zoom. Let's see if I can go live on Zoom. Okay, ain't saying nothing they don't like. All right, but can I go live on? Oh, I could do it. Share sound. I think we ready. Invite. Copy link. Go to Trading View. And I think we live. My chat. All right, do me a favor, Don. I gotta use the bathroom. Let me see if this shit work. Why is the bathroom? Jump on right quick. Talk this shit right quick. Jump on. You gonna see people come on right here. You looking on this screen. This is the YouTube. People come in. You may have to press like you might have to let them in maybe. But let me see right now. So it's you. If people come on, and that's YouTube. But people from Zoom is gonna be over here. So I ain't supposed to link. Oh shit! I ain't supposed to. I ain't supposed. Oh, you better be live. Okay. I go over here. I go invite. Copy link. Over here. Copy. Paste. Everyone. Alright, now we should be good. Alright, that's the link. PPT. And people gonna come in over here on this side. I should come in right about now. Y'all, stay participant. Alright, let me look at that right here. My choice. My choice. I'm here.
Mic check 1 2 1 2.
Yeah, you just focus on that. I gotta look to the right. You just focus there.
All right, so what we looking at today is PD arrays.
Oh, is it that? Is that yeah. Oh, look, see, the same person. It's the big ring. Oh, real quick.
All right, so what we looking at what we looking at in today's class is how to use PD arrays. Right, we're gonna draw out a couple of PD arrays here. And you know what? Matter of fact, let me write this real quick. Right, let me do this. Huh? Oh, okay. Oh, that's because it was you ain't hear it through. Show you what it do, what it does. All right, Divinity, what it do, what it does. All right, Casino, what it do, what it does. All right, all right. So we're gonna draw this right, and we're gonna write PD PD arrays. Um, I'm just getting set up, y'all. As y'all can see, I'm writing down what the PD arrays are. You feel me? So PD arrays, right? We'll do it like this. I wasn't talking. I was just drawing this out. Right. So your PD arrays are fair value gaps, inverse fair value gaps. I can't spell. Order blocks. Let's see. Is there anything else? I don't even like this, so let me. No, that's cool. We'll make this a little bit bigger. Zoom user. What it do? What it does. All right. So let me see. Did I miss anything? Any? These are the major ones. Fair value gaps and versus. We don't really use rejection blocks. We'll go over them one day, but for the sake of time on today's video, we're probably just gonna go over these four because these are your main entries right here, right? So let's go over the first one. Let's go over fair value gaps, right? And remember, the lesson on today's session. Oh, that was bars. God, somebody write that down. That was bars. Can we clip that? The lesson on today's session is PD arrays and how they are used, right? So this is what they are. Let's keep this in close proximity, right? So PD arrays are fair value gaps. Now right here, I got a bullish fair value gap drawn, right? So after the PD array is created, right? So we got the bullish fair value gap here, right? And when price is up here, right? When price is up here. So we got the fair value gap that's made. Hold on. Matter of fact, we can do this from replay. So when this fair value gap is made, right? You want to see the fair value gap get used now, right? So if you want to see it be used, you want to have a rectangle drawn as your fair value gap, right? So we already know that the fair value gap is candle number 1 to candle number 3, where the wicks ain't touching, right? So you put your rectangle from candle number 1 to candle number 3, the wicks that are not touching, right? That makes your fair value gap. Now, when price is above your fair value gap, right? You want to see it be used. You want to see it be retested, right? Retested means touched, right? So we're up here. Price is up here at 75.26, right? It hasn't touched the fair value gap, right? You want to see it touch the fair value gap and then continue to go higher, right? If we're in a bullish trend, which it looks like we are right now. All right, we got a sweep, displacement, market structure shift, and then we got a sweep on the lows, and we got to run away, right? So let's bring our attention back to this fair value gap, right? This should be in bullish order flow, right? So if market structure is true, this fair value gap should be used to take us higher, right? So let's see what happens. Okay, so we ended up going higher, right? But why did we do that? This fair value gap, right? When we were up here, we wasn't in it. Then we came back, we touched it. This is the retest. And then we ran away from it. And then eventually we ran away from it, right? So that's what we mean when we say you want to see a PD array. Remember, your PD arrays are fair value gaps, inverse fair value gaps, order blocks, breaker blocks, right? You want to see your PD arrays get retested. So you want to see them get created, and then you want to see them get retested, right? Now, if you're not taking those, you should definitely be taking those, because what I'm about to give you right now is some real sauce on how the PD arrays should really be used, right? So not only do you want to see the PD array be made, right, and then retest it, but if you notice, every time we draw a rectangle, it always look like it's two halves of the rectangle. And you can see that right here in the middle, it's split right here, but like with a dashed line. So you got a rectangle, you got a dashed line, and then you got the bottom of the rectangle, right? But the dashed line represents a upper half and a lower half of the rectangle, right? And that's very important, because if price is bullish, it will give you certain signatures, right? And one of the signatures is this right here. A bullish fair value gap is made in bullish order flow. A bullish fair value gap is retested, and a bullish fair value gap supported price to continue higher. But in this bullish fair value gap, if you notice, all of the bodies stayed in the upper half of this rectangle. You don't see no bodies in the lower half of this rectangle. That's a very, very important signature in price. If you want to see it continue in the way that you see it coming from. So it's almost like it's like stairs, right? It came up, stepped, came up, stepped, came up, stepped, and then went higher, right? Now in here we probably respected some different PD array that I'm not seeing right now, but we can come back to that a little later. But let's bring our focus back to this fair value gap, and I'll show you another one that I seen earlier, right? Look at this fair value gap. Now this one might have colored outside the lines a little bit. It might have came below the middle line a little bit. Let me actually draw a rectangle around that. Appreciate it. Actually draw a rectangle around that, right? So if I draw a rectangle from here to there, okay. We got our fair value gap, right? We got our lower half and our upper half, right? Cool. We see here the fair value gap was made, and then we came back into it, stayed in the upper half, and then we ran away from it, right? Cool. Now, price rallied back down into the fair value gap. Price made the fair value gap, um, retested it, and then ran away from the fair value gap, right? And then we rallied back into the fair value gap, retested, up, came back down, retested. Now here you can see that it did come outside the lines a little bit. Yeah, he in there. Yeah. So you see right here, it did come outside the lines a little bit, right? That's cool. Because if you see it do this, but it start leaving this fair value gap, it's probably getting respected. In which you could have caught like a long right to this high right here, the internal high. Keep it safe. If you see it, okay, that's a great question. Now, mind you, I'm doing all of this on a 5 minute chart, right? So let me draw at where you would probably start to get a little, you know, anxious, and then where your entry would probably be at. See if I got this right. Let's go down to the 1 minute. Okay, then. All right, so this is we're looking at the same exact thing on a 1 minute, on a 1 minute chart right now, right? So I drew these circles to show you like where you would probably start. Like this blue circle is where you would probably start getting interested in like taking a trade. This green circle is pretty much your entry. This is actually definitely your entry right here. And I'm gonna explain that in a minute. So this it looked the same exact way it did on the 5 minute. It's just this the 1 minute. You feel me? And matter of fact, let me see.
You're wrong. You hear me? Yo. I said I just want to make sure you like that. Hey, what about your homie though? Shit, don't be stingy with the game now. He's not smart when he's done with you, motherfucker. Come on now.
Oh yeah, it get real when I get on the mic.
This shit recorded though, so I can go back and watch it after we're done. I'm just sending them the Zoom link. And then so Don, remember from time to time, look to your right. I see somebody coming in.
Yeah, right.
Appreciate it. You on NASDAQ?
No, I'm on ES right now. And move the exact same. All right, so on my left, I got a 1 minute chart. On my right, I got a 5 minute chart. Right, and I pulled the 5 minute back up to show you that this shit look the same. So as I scroll over the 1 minute chart, you're gonna see what I'm scrolling over on the 5 minute chart. Right, so this run up right here is the same thing on the 5 minute. Right, we're looking at the same things. Then we got the drop down. That's those two red candles on the 5 minute. Right, so what do? It came down, it touched the middle line, and then it ran away. Look at that move right there. That's a great move right there. You could have caught that. Right? It's just you would have never caught it down here. Your entries are always going to be when it's coming out of the PD array in your direction. Right? So
Remember, remember, your PD arrays are your fair value gaps. Hold on. I forgot everything is capitalized. I'm gonna draw it again just for so it's close to us. Fair value gaps, inverse, fair value gaps. We're gonna do breakers today, and we're gonna do order blocks. Right? Remember, these are what we mean when we say PD arrays. So right now we breaking down a 5-minute fair value gap. Right here you can see I got the 5-minute fair value gap, John, and I'm breaking it down on a 1 minute. Now, what I talked about earlier, for everybody who wasn't here, if anybody wasn't here, or if anybody needs a refreshment on what I said, is a retest. I'm talking about retest right now on PD arrays. So I'm showing you how they're used, right? So they're used by being retested and respected, right? You better respect me, Nick. But yeah, they're used by being retested and respected. Now a retest, like I said earlier, is when the PD array is made, right? So this fair value gap was made, right? This is it on the 5-minute. This is what I drew. I drew this on the 5-minute. This is how it looks on the 1 minute. Right? Same principle though. I'm showing you on the 1 minute because your entries are gonna come on your 1 minute, but you're gonna be looking at the market on your 5-minute to make sure that all of this shit is happening. The entry is the last thing. So fair value gap made, right? 5-minute fair value gap. You draw it out. So boom, it's made, and then it comes back into it. When it comes back into it, that's called a retest. A retest is when it comes back to touch a PD array. Remember, fair value gaps, inverse fair value gaps, breakers, order blocks. Definitely, definitely. All right, so let's look here, right? When I said that the fair value gap was made, right? This is fair value gap, 5-minute. It's above the fair value gap here. Looking on the 1 minute, it's above the fair value gap on the 1 minute. So now it comes back into the fair value gap on the 1 minute, right? Remember the 1 minute is on the left. So inside the candlestick, right? Inside this box. This. Yeah, but I'm saying like you like you looking off of this one huge candlestick, one green candlestick. Yeah, that's how you base this box. Base your. Well, I base the box off of being a fair value gap. You know what the fair value gap is, right? 3 candlestick pattern. Yeah, the 3 candlestick. Yeah, that's why I drew the box. So that's what the box is based around. So now I'm showing you like how the box is, like how the fair value gap is used. Because the only thing we showed you is what a fair value gap is, which is the 3 candlestick pattern where the wick from candle number 1 is not touching the wick from candle number 3, and the middle candle shows you the direction. Right? You with me on that? You got any questions about that? Yeah, I'm with you. Okay. Okay, cool. All right, cool. So when we make this fair value gap, right? And let me actually replay it again.
because I can. So let's say we here, right? This is how the market is gonna look, right? We made the fair value gap, and now we waiting on it to be retested. So we got a touch right there, right? So it's like, okay, cool. Let's see what happened with the next candle. The next candle don't really do too much. It's right there, but it's a bearish candle though. So it's like, okay, we still patient, we still waiting, right? So you get this candle, it's like, ooh, okay, that's all right. Let's just see what happened after that. Because if it start going down here, then we probably not bullish. So let's be patient and see what happens. We get like a little doji looking candle right there, right on the fucking equal, like right on the middle line that we be telling y'all about, right on it, right? So if you trade retail, you know a doji candle is like an indecisive candle, means for a reversal. So anyway, we get this right. We patient. We get a bullish candle. That don't mean you just jump in right there. It's like, okay, we get a bullish candle because the next candle could be bearish as fuck. So let's see what happens. Okay, we getting some bullish momentum. That's cool. But I wouldn't jump in this until we leave this. Right. So let's see. Get another bullish candle. Get another bullish candle, but it only wicked outside of it. I want to see some bodies start to come up out of there. Right. So let's see what we get. Oh, see, we get another bearish candle. Get a bullish candle, but we still ain't leave it. Still ain't leave it. Still patient. Right here. I'm like, okay. I'm like, okay, cool. Let me wait for one more candle just in case. Right here might be a nice buying opportunity for real. But I'm like, let me just wait for one more candle real quick. Let me just see real quick, right? Because we be targeting these highs right here, these equal highs right here. You feel me? Matter of fact, let me draw that out. They're not equal, but they relative. They real close to each other, right? So that would be our target to go from this fair value gap to them highs right there, right? So boom. I would probably be patient and wait for one more candle just to make sure we just don't like one red candle just don't just like bust through it. So I'll wait for one more candle. Okay, that's good enough for me right there. I would go long right here. Stop probably in the lower half right here of this fair value gap. Like somewhere probably maybe like yeah, maybe like here. Stop probably like right here. 491. Let's remember that. 491. And let's play it out. Let's see what happened from here. So now we don't enter the trade, y'all. We in the trade. Stop at 490 or 491, wherever you feel comfortable at, right? Let's see what happened. That shit got real close to TP, didn't it? Oh, there you go. That trade worked out. That did what it needed to do. That's quick money. That's easy money, and it was no drawdown in that trade. That's something else. That's that's crazy because I was just about to get into that next. Like I was gonna walk right into that because I was about to say we did something that was like very important here to also show that it's like signs of bullish, right? Hmm. I literally if she just wrote down everything I just said, I just gave her the entry model. Literally. Like literally. When we make the fair value gap, we retest it and then we're leaving it in your direction. Like I just showed you the example of that. Mhm. Mhm. Now, I'm about to smooth out the edges right now. So now on the 5 minute, right? It looked beautiful. Came up, made the fair value gap, retested it, stayed in the upper half, just like me and Casino say, and we did what? Went straight to TP. I don't know how much money that would have been on ES, but yeah, ES is yeah, it's one of them movers. But anyway, so let's walk straight into the next thing, which is inverse fair value gaps, right? And I see one right here, and it got used the same exact way, right? So if we come back here, let me see. If we come back right here, right? Let's actually get that next candle in here, and the next one too. All right, so this is a bearish fair value gap. Does everybody see that?
No, I'm listening. I'm listening. No questions.
Yeah, yeah, you got everything.
Cool. All right, so does everybody see the bearish fair value gap that I'm pointing out right here? I don't want to have to. I don't want to have to draw it out, but I will though. Matter of fact, let me draw it out because I'm about to use it anyway. Here we have a bearish fair value gap, right? And I'm not gonna complicate it and draw it how it's supposed to be drawn right now, but for the sake of time, because we gotta go get some food from this nigga crib. They got free food over there, but you know I'm going. But stop playing. So anyway, right here we got a buy side imbalance, a SIBI, sell side imbalance, buy side inefficiency. Another word for bearish fair value gap, right? So with this bearish fair value gap, right? I'm in my mind, I'm like, damn, I'm already expecting that to fail because right now we're in a higher time frame, 5 minute bullish fair value gap, right? So any bearish things that's happening right now, I'm not expecting that shit to hold. Matter of fact, I'm expecting that shit to get disrespected and then help us go higher. I just explained it. We're in a 5 minute bullish fair value gap right now. I'm expecting it to fail to take us higher. Right? So we get a perfect example of that right here. You feel me? So boom, boom, boom. Right? So when as soon as we get a candle that closes above this fair value gap, this bearish fair value gap, it is now considered a inverse fair value gap, right? So an inverse, right? When y'all hear the word inverse, what come to your mind? Yes. Anybody else got any answers? I'm trying to get some crowd engagement here. Oh, see, we ain't even listening to the questions, y'all. Oh Lord. Okay, so when you hear the word inverse, what comes to your mind? Reverse. I heard reverse twice and I heard opposite. Yes. Keep that. So when we say inverse, just think reverse or opposite, right? So if I was expecting this fair value gap to be bearish and take us lower, but it break above and it inverse, what am I expecting now? Yes, all of y'all just said the right thing in y'all own way. You feel me? But yes, that's exactly what I'm expecting. So, especially with us coming out of a higher time frame, remember we're in a 5 minute bullish fair value gap right now. So I want to see the bearish things get disrespected, which we already did when this one candle right here closed above it. As soon as it closed above, it got to be a body. It can't be a wick. It got to be a body. As soon as a body closed above this bearish fair value gap, it's considered a inverse, right? And now I'm expecting the same exact signature that I just told y'all, where I said we make it, and then we retest it, and then I said what? We stay in the what half if I want to see it go higher. Yes, in the upper half. I want to see it stay in the upper half, right? Yes, that's one of the biggest signatures that we use on a daily basis. Like we use that with actually every single trade. Like it got to do this. If it start closing in that lower half of any of this shit right now and it's bullish, it's not bullish no more. Right? But I ain't even bring that up right now. So shit, 3 people who want to get fucking rich. So we close above it, right? We made this an inverse, right? So let's see what we do. Remember, we was going to the highs up here at 713. Remember, I brought it back a little bit. So this is still the target right now, right? So the first thing we used was what? The 5 minute bullish fair value gap, right? Now you got a 1 minute inverse bullish fair value gap. That's two confluences, right? Of bullish, right? I ain't even bring that up. I ain't even bring up the market structure shift either. I see all of them right there. Oh my god. Matter of fact, hey, I ain't gonna lie. We gonna go right into the next one too after I get done with the inverse fair value gap. So y'all finna get a breaker too. So anyway, god damn. All right, so made the 1 minute inverse fair value gap. We see it, right? What do we want to see? We want to see it get made, and we want to see it get retested, and then you want to see it stay in the upper half and start to leave it. So let's see what we get. That's one retest right there. You probably could have caught it right here. Stop below the inverse fair value. You're not even expecting it to come down anymore. Because it's different ways you can catch it. But I'm gonna show you. I'm gonna show you both ways though. I ain't seen that shit yet. Okay then. We know where it's going. We know it's going up there. We've seen it already, right? So look what it did at the inverse fair value gap. It only wicked inside. No bodies went in there. That's even better. It only wicked inside of this zone. That's even better. Before that shit took off. Like I said, it's gonna stay in the upper half of these PD arrays before it started to displace. It's going to retest these shits. I'm just showing y'all how it look on a 1 minute and a 5 minute. What you got?
So you said you would have waited like, well, you would have caught that first candle, but you see how the red one, like the wick, them that touched the middle. That was the only one that touched the middle. Why you ain't waited on that one?
Oh, this one?
Yeah.
Nah, I'm not. Cause remember, I'm still looking at the 5 minute fair value gap too. So I would have still had to wait for it to leave that too. You feel me? Because none of these candles left the 5 minute yet. So when it broke out of both of them shits like this, it's like, oh, okay, let me wait for one more candle. So my entry still would have been up here anyway.
Okay. True. That makes sense.
You feel me? So it's this what I teach when I trade, like, is I teach the concepts, but I also teach patience with my type of trading. You feel me? Like, if you learn from me, your ass gonna be extremely patient, but you're gonna be hella right though. You feel me? You only need to win 30% of the time in this shit right now, right?
As long as you 100% right,
You
that
you
30% make you feel like you.
you don't even got, bro. You don't even got to be right 100% nothing. All you gotta do is be right 3 times out of 10, and you could be rich as fuck. You feel me? With 30%. Right now, I'm sitting at 70%, like per trade. So 7 out of 10 trades right now, I'm winning. Type shit. So
That's why I told you we need the blueprint down.
I'm giving it to y'all right now. I'm breaking it down to y'all right. This, you gotta take these notes. This is what you gotta study. I'm giving it to y'all black and white right now. You feel me? I'm showing you exactly what the market do. So let's go straight into the breakers right, and then I'm gonna get y'all to casino. So a breaker,
Oh, one example with this.
everything is there. All right, so
These be the best place right here when everything is there. Oh shit, you got Don put on the pad.
get down on the path. You know some shit going on.
I've never seen you do it like that. Yeah, look at him.
All right, so
Yeah, you moving it big as hurt.
look at this example right here, right?
Gotta look because look your face right here. But they can see it, but you know,
Oh yeah, now we Gucci.
you gotta just turn it up a little, put it up a little bit. Yeah, you heard.
All right, so I want to show y'all what we got here, right? Let's start right here. This is a low. Think of this as a low, a high, a lower low, and then a higher high. Right? So let's look at that again. Low, high, lower low, higher high. The low is right here. Start with this low, and then we put in a high. And then we come down, and then we put in a low that was lower than this low. Okay? You see what I'm talking about? And then we shoot up, and then we make a high right here that was higher than this high. Okay? I'm gonna show y'all a real life example of this right now. Matter of fact, I could probably just drag this over it.
No, you gotta try right.
Damn! Straight to the retest, dog. All right, so damn, y'all seen me draw that free handedly, and then I just dragged it up over the breaker. You feel me? Matter of fact, we kind of off a little bit because the lower low is down here, right? So this is what it would look like in real time, right? So I had to adjust my shit just a little bit. So you got the low, high, lower low, higher high. Then look at the retest. Boop. Straight to the highs. That's what you call a breaker block, right? The breaker, write this down. Low, high, lower low, higher high. Period. That's the breaker. The retest of the high. So with this PD array, right? It's the same exact principle. You want to see it get retested. You want to see it stay in the upper half. Now let me draw out the actual breaker, right? The thing that you're gonna draw when you're drawing the breaker. Do y'all want me to keep this path up? Or can y'all see it without the path? Okay, I got one, doesn't matter.
Yeah, it doesn't matter.
Okay, I got 2 dozen matters. Okay, we good. Take that out then. All right, so oh shit. Let's look at it one more time. Low. Wait. Low. High. Because now I'm showing y'all the chart example. Low, high. Lower, low. Higher, high. Y'all see it? Low, high. Lower, low. Higher, high. For a breaker, it's always going to be that. It's always going to be that. It's always going to be that. Low, high, lower, low, higher, high. If it's not that criteria, it's not a breaker. You feel me? If it's not the low, high, lower, low, high, high, it's not a breaker. Now, the candle you draw for this. Now, this one a little more tricky because you actually got a wick here, but you really just supposed to draw the one candle. The actual breaker. Gee, oh my God. Oh my God. Listen, I don't make the market do this shit, bro. This is what it do on a daily basis. If you catch this shit, bro, you rich. You feel me? Cause look at this again, upper half, nigga. Do y'all see this? Look at the 5 minute, bro. Look at them 2 bodies, bro. Bro, if y'all just take down what we tell y'all verbatim and just study it and just look at y'all notes and then just look at the market and look at the note and look at the market and be like, oh shit. Okay, that's okay. That's that. Okay, that's that. That's that. Cause we giving it to y'all exact like the way we saying it is exactly how it look. That's what we be trying to tell y'all. So it's like when y'all not advancing, it's like, damn, how y'all not? You feel me? Because we show like everything we telling y'all is exactly how it look. And then we trade the exact same way all the time. Just trade out what it took.
Then you think about it, after this part, we gotta get into the psychological part. That's where I'm at.
You feel
We gotta
me?
get into the mental part of this shit.
I'm at the point where I struggle when I lose now. Like I gotta accept my losers. Like that's the point I'm because I don't lose a lot no more for real. 7 out of 10 trades, I told you I'm winning them shits. So it's like when I lose, I kind of tilt sometimes and I lose a little more money than I should. But that's the point I'm at. I gotta smoothen out those edges. I'm still a student too. You feel me? So let's look back at this, right? Breaker. Low, high, low, low, high, high. The candle you're gonna draw for a bullish breaker is always gonna be the last, write this down, the last bullish candle on the low high leg. Write it down just like I just said. It's gonna be matter of fact, let me write it down for y'all. And then I'm after this, I'm gonna get y'all back to casino. It's gonna be the last thing I write. I'm about to write it down right now.
No, I don't think I have to explain anything. You just broke down everything with one example, bro. You take me a shower. Hey, I want to say this one time. You see the mic? I want to say this one time for the boys. One time for the boys. Hey, listen. So this is what right? Y'all wanna. This is what I always wanted to pay the mentor to do. You see how niggas is walk. You see how niggas walking shit down. and the nigga like really, he really breaking that bit down. It's like, yo, this is what you're supposed to be looking at. Yo, this the upper half. This is that, right? So that's what I always wanted for my nigga, for my mentor to do, right? So the fact that I'm seeing it, it's amazing. But what I'm trying to say is, it's gonna be a point of time where he's not gonna have time to do this. So take the gain that the nigga giving for value, because it's gonna be a point of time. In trading, remember, God works in abundance. So it may rapidly, it could, you feel what I'm saying? So it's like, take the game that he giving, G, and write them hoes down, bro, because it's the same game. We take the same trade, it's the same exact everything all the time, either up or down. It's the same plays. So he may not be around to give y'all this game slowly as he's talking it down to y'all, because eventually he may not have no time. So I just wanted to say that, cause that fun nigga giving that. So, oh shit! Or exit not right. Quick shot, you already went over all three. I guess you kind of go over a little bit.
We just gonna go over until you get out of the shower. Fuck it. All right. Y'all still hear me? Y'all good? All right. So
I'm proud of you, bro.
I'm just trying to make other people rich, dog. I'm already halfway there. Shit, I'm more than halfway there. But I got this last push, y'all. So anyway, breaker, low, high, lower, low, higher, high. Now let's go over let's do exactly what I just wrote down here. To draw bullish breaker. Oh wait, my bad. I put last leg. My bad, y'all. Players mess up too. Players mess up too. Sorry. To draw bullish breaker, draw last candle of low high leg. Okay. Well, what did he say it was? He said low, high, lower, low, higher, high. So let me see this again. To draw bullish breaker, draw last candle of low high leg. Well, where's the low high leg? Low high, low high, low high. Draw last candle of low high leg. Okay, well, let me draw the last candle of the low high leg. Oh shit. Look what happened. We came down. We touched it. We stayed in the upper half. We went straight to TP. We ain't even have no drawdown. Same type of entry. When a breaker's made, we want to see it respected. And then when it's leaving the breaker, for me, I like to see two candles leave the PD rate. So this one candle leaving it, that's the second candle leaving it. I would have jumped in on the second candle right here. Stop below. Anywhere in between, anywhere down here or down here, whatever you feel like you could have dealt with. That would have been like 7 points. But remember, this ES though, so the money move a little different. 7 points on ES is a lot of money. So, with that being said, same concept. The PD array is made. We retest it. We respect it by staying in the upper half. We leave the PD rate. We take an entry when we leave in the PD rate. TP. Target the closest high. Target the closest high. Internals. When they get to the closest high, when they get to your TP, if you end more than one contract, what you're supposed to do is you're supposed to take partials at TP and move your stop to break even. And I'm going to show you why right now. So let's say you in the trade, you jump in your entry like right here. Let me see. Oh, matter of fact, I could do a long shit. Jump in, stop right here, TP, right there. Right? Cool. As you can see, we already have way more than one in this trade already. My TP probably wouldn't even been on the lines. My shit would have been just a little bit lower. My shit would have been like right here. Like just to make sure I get a feel. But anyway, you can put your shit right on the line. Right? So hit TP, right? It'd be best if you move your shit to break even. Unless you expecting higher prices, right? But it'd be best if you move your shit to break even and take partials right there. Now you're not risking no money. Or you can even move your shit into profit. Now you're not risking no money, and you just won money. So let's see what happened. Boom. You get taken out at break even, but you won money already. So anyway, it come right back to the zone, right? We come back, we sweep these internals. We still in this bullish fair value gap. We still pretty much respecting this breaker. There was an inverse right here. We cut it outside the lines on that, so I probably would have deleted that. But I definitely would have I definitely would have checked to see what we'd have did after we swept these lows. Because if we close this fair value gap right here, this bearish fair value gap, then it's gonna be the same exact shit, y'all. Repeat yourself, nigga. At first, this is a fucking SIBI. A bearish fair value gap. Same shit. Hold on, I like to have my shit accurate. Same shit, right? At first, this is a fucking... And that's why we fuck with this model, because this shit's so fucking repeatable. It happened over and over and over and over and over again. So now we got a SIBI, right? We expecting this to take us lower. But what are we doing? We still in this fucking 5-minute breaker. Right? The 5-minute breaker. That's still supposed to take us higher, right? So we get a sweep. If we close this, that's probably bullish. Let's see what we get. Some of the bodies cut it outside the lines here, right? But I'm going to give y'all some sauce, right? This breaker is still valid. All right. So remember I said draw the last candle of the low high leg, right? I told y'all to draw that candle for a reason, right? That candle is the most sensitive part of the breaker, right? Now, the last candle is always like whatever, because I'm about to show y'all like the whole breaker. This is not the whole breaker. This one candle is not the whole breaker. The whole breaker is actually, and you can see it went in the bottom half here, right? But that's not the whole breaker though. That's just the most sensitive part. The whole breaker is actually both of these green candles. This green candle right here and this green candle. That's actually the full breaker. But we don't draw out like the whole thing. We won't do the whole thing because sometimes it'll be more than 2 candles. Sometimes it might be like 4 candles or 5 candles. That should be long as fuck. And now it's just a big ass box. But in that case, you still don't want to see it go no lower than this first candle, which it never did. right? So in retrospect, this breaker is still valid, even though earlier it looked like it went lower. I just didn't have the whole breaker drawn because in my real time trading, I'm really only drawing this first candle because I want to see the first candle get respected. But in my mind, even though this happened, I still know that it's still like the breaker is still respected because I just know I just didn't draw the whole thing. You feel me? Now, coming out of this breaker, I still got the entry drawn right here, this green candle. I mean, this green candle right here would have probably been my entry. Where this green circle is at. Anywhere in there, I probably would have caught an entry. It probably would have definitely just been this green candle right here, though. Because remember, I always said I wait for 2 candles to leave. So this was the first one. The second one was bearish. I wouldn't have caught the bearish candle, but I would have caught this bullish candle though as an entry, and I would have targeted. Let me see. Nah, this definitely not a short. I don't know about the W and shit. I know about the stuff that I'm telling you right now. Let me see. Targeting these highs, maybe. Probably a stretch, but let's see what happened coming out of this breaker, though. You feel me? Let's see if we reach for these highs up here. That's best case scenario. We reach for these highs up here. Right? But this looked like a play that could run that, though. So let's see what happens. Right? We're just going to run it and see. These highs, your best case scenario at this point, your internals are right here now. So you can catch it from here to there. And mind you, 10 points in S&P, that's a lot of money. Well, S&P move at like $12.50 a point. $12.50 per point. You feel me? So it should add up for you. So let's see where this trade goes. First TP smash. I'm trying to tell you. Let's see what happened though. Let's see if it. Yeah, we get a shitload of consolidation. Oh shit. Matter of fact, this was the next day, so I don't even know if it's gonna keep pushing up or not. But somebody say use order flow. Nigga, this is order flow. It's real order flow. So anyway, I'm not gonna keep clicking this shit, but you feel me? You see the idea. That shit ran. Yeah. You feel me? So yeah, man. These is your PD arrays right here, man. I can't believe somebody asked what PD arrays is, and I got it drawn right here.
It's kind of small. Look,
can y'all see this?
Look at it here. That's how they see it. They see it like this.
Can y'all read this?
Niggas on their phone.
It's so good you can screenshot it, right? Stop playing with me, bro. This nigga's just.
He probably on his computer.
I'm a fucking pro, nigga.
I'm saying you are on using this. You know.
So anyway, that's pretty much all I got for y'all. These are y'all PD arrays. We didn't go over order blocks today, but we'll go over that another time.
Shit, I'll go over that.
Oh, the casino gonna go over for y'all even better. You feel me? I appreciate y'all for having me, dog. Hope y'all got some good game. It's right there. I made sure I wrote that.
All right, round of applause. Round of applause for Smart Money Dawn, man. You feel me? I'll make this shit nice and quick. You feel me? So it's an order block literally right in that damn zone, right? So quick question. Do anybody see the order block? Do anybody see the order block? I don't know. I'm gonna delete all this shit right quick. He said the red one. The red what? The red one. Is it the last two red candles? Let's see. She said the last two candles right here. Right here. Where's the arrow? All right, hold on. You said so right here or right here or right here? Are we talking here? This right here? Okay. What about this? Is this an order block? Is this an order block? First, this before we get into disrespecting and disrespecting it. Yes. Okay. Is this an order block?
Not really.
Okay. To go back to this one, because everybody say this was an order block. What makes this an order block right here? What? Which one? This right here? Or this one? So you're saying it makes it order block because it's an engulfing pattern. That what you saying? Okay. Somebody else. Why? Why? Like, where's the order block?
On your
That
nose.
red candle that's blocking the green.
Say it again.
The red candle is blocking.
Oh no 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 no! You got it. You got it with the bullet engulfing. That's your answer. What's somebody else? Where's the order block? Like you said, this was an order block, right? Or this? Where's the order block though? What makes it an order block? Yeah, like what makes it an order block?
Once you put this box, you know that half line you have in the box, it passes it,
Here?
and then you have a big green candlestick that have a. Oh well, I can't. You can kind of see a wick, but it's a wick. The red wick go way past. Yeah.
Okay, next person. Good try. But it's because remember, you're still struggling with saying the word. So I feel you. Shay, what is an order block? What makes this an order block? You the last person. I need something. Who you said this was an order block, right? And this one you said something about it got disrespected. What makes it an order block? Say, say, hey Rob, can you mute yourself right quick, Rob? Right quick, please, until you're ready to say something. Appreciate you. Shay. So now say it again. You said so. We speaking right here. Above here. All right, so let me go this way. I just want to make sure you know what an order block is. That's all I'm trying to figure out. So where? This high? This high? Where are you saying? Here. Okay. So you're saying when it closed right here, that made it an order block. She got it right. I just trying to make sure. I just trying to make sure. You're absolutely correct. So now let's break down the order block. You're correct. And divinity, you're correct also. The bullish engulfing. It's multiple ways to see it. So let's break this down. This is what the order. Okay, so now one more thing. One more. So before we get into it, so we said this order block also, right? So both of these are order blocks, right? So what about this? Like is anything down here an order block also or no?
Yes, the last red candle before the two green candles.
The last red candle right here or up here?
Right there.
Up here. Oh, down here. Okay, perfect. Okay, so this is order block. So what about so another thing is this an order block when it closed above here? You see how it closed up here? Is this an order block? All of these things? Because you already said this order block. Okay, cool. This down close candle is an order block when it closed up here. Cool. What about anything up here?
I want to say no.
You want to say no? Okay. Why? Because what is an order block? This one, what is an order block? When you have a bullish engulfing, look at look divinity, look at all of these candles. Right, hold on, music. Now I can switch tools. All right, look at all of these candles here. Remember, look at all of these candles. Look how this green one right here engulfs all of this. So if this right here, right, got engulfed up here, just how this here got engulfed here, doesn't this mean it's an engulfing pattern also? If these two green candles engulf all of these. So what I'm saying is this is an order block, this is an order block, this is an order block, this is an order block. They're all order blocks. Now the key is, how do you use them? That's the key. How to use the order blocks. So remember, an order block is when you have a bearish candle that closes above. So right, so if you have remember on the higher time frame, all of these 1, 2, 3, 4, 5, 7, 10 candles right here, because it's going down. Remember, if we open high and go low, that means it's bearish. So the fact that we started going down and we close above here, let me delete this zone right quick. The fact that we went down and we closed above here. Now look, we closed above all of these bearish candles right here. So don't that make, so look at the order block. So if I actually draw all of the candles going down from here to here. Because yeah, it's a lot going on, but that's how you, it's so much going on, so you gotta be able to, that's what I'm saying, you gotta be able to remember, look at the upper. So if I use a fib and I draw from the upper half to the lower half, where do you want to see the order block stay in? For a bullish one. In the upper half. Remember, there's two parts of the fair value gap. Look how it stays in the upper half. So I'm just showing you that everything could be an order block depending on how you look at it. So I'm gonna just show all the order blocks right quick. This is an order block. This singular down close candle, right? But it's only an order block once it closes up here. So if it ever comes back down to this line, this is where we are expecting it to stop at. That's why you go see my trades. I'll be having little lines and shit. Every line of fair value gap, that's where I'm expecting it to stop at. Now, so now that's one fair value, that's one order block, which is AKA changing state of delivery. Just made the line a little bit bigger. Boom. And then remember, we have this order block also. Remember, because we closed down, look how we closed above the high. That makes all of these candles an order block. Where's the most sensitive part of the order block? No. What? Where's the most? Remember how me and Don experiment a little bit differently. For me, where do I say this is where? So when I always be like, where's the most sensitive part of the order block? I don't. The wick, but I always, the wick, the top part. So it's always from. So if this, remember, it closed up here, right? So this top candle is the order block. But remember, all of these are the order blocks. Remember what I said, the most sensitive part of the order block is from the opening price of the last candle to the top wick. That's why I draw it like this. From this top wick to the opening price, and then I extend it through. So anywhere in this zone, I'm looking for it to hold, right? But remember, it's not going to be perfect all the time. So let me just draw the order block. So this is an order block also. That's why look what it says. If I go to my template, look what it says. OB's wick. I already have it saved as a template. Look, OB's wick. So right, that's an order block. And then look, what else we have here? We have another fair value gap here. So this is sometimes when it uses a lot of different things. So this is an example where you have a lot of confluences. So look, matter of fact, I'm just because we just going over order blocks, tripping. Kind of got a little too excited. So it's basically like once it closes above, once it closes above, wait, where was it? It closed here, boom. anything up here. Oh, I didn't even see that part. Tripping. Let me delete that. Look at that right here. Another order block. Let me delete. So we already know that's an order block. Let me delete it. Look at the down. Look at all the bearish candle. Look at this right here. So where is that? Boom. So look how we got one bear. So we got a green candle. Remember, it starts over, right? We got a green candle. It starts over because it didn't close above, right? Bearish, bearish, green one. So once we get above this one, this is an order block also. So we have this is an order block and this is an order block, right? So now look, it knows a little confusing, but that's just how it is. So look right here. Look at this. Look how perfect it respects it. Oh my fucking God. Look at that. Let me delete the zone that he drew right quick. Yeah, the opening price of the order block. So this is why when you're late, you can use other PD arrays. So remember, look what I'm looking at. I'm looking at this candle. This bearish candle right here. The opening price. Remember, bearish candles open where? Where do bearish candles open?
Bottom.
Hell no. Bearish candles don't open at the damn bottom. At the top then. See, we teach different. Don teach slow. I teach fast. Yeah, I teach fast. I teach because I'm trying to hurry this up too. That's why I like the way Don teach, because Don will slow that motherfucker up and like just that beat real slow and like all that for you. I'm kind of like, but anyways, so look, I'm looking at this candle. Remember, bearish candles open high, close low. So the opening price is literally right at the top, right? So remember, the most sensitive part of the order block is from the opening price, right? So remember, I'm looking at this opening price. You see how it broke through? Okay, cool. Fuck it. I'm looking at the other one. Look how it respects it perfectly. Look at the wicks. Look how this wick came into it. Stopped right there. Look how these wicks came into it. Why this shit not there? Look how the wicks. Look at the wicks. I'm showing you the respect of the order block. Look at the wicks. Look how many times it came in here. But look at the bodies though.
Yeah, I was looking at the body.
Look at the bodies. All the bodies at the top of it at the opening price. Look at the bodies. Boom, boom, boom. So this is called support. This is why I look for. So I draw my support zones as order blocks and fair value gaps. So our support zones are the PD arrays. For ICT traders, we use the PD arrays as support and resistance. So look how perfectly it's respecting that shit. And then look what happened. It's not coming to. So another thing, it's not coming down here. So the fact that it's respecting the upper half of this zone perfectly, it's not willing to come down here and retest this order block here. Because what else it has here? It has the fair value gap that's right there. Exactly. So it's not. And remember, look how it's already in the lower half a little bit. Oh my God. Look how it's stopping the upper half too. So you have two things that stop. Like, look at that shit. Look how the body stop here, respecting the order block. And look how the body stopped literally right there, respecting the fair value gap. So this how you would get in. So now it's like, okay, I see everything. And look what we get. We get the internal sweep. Look how we sweep this internal low right here. We have a low right here. Look how we swept it. A liquidity sweep. Remember, a liquidity sweep is when we sweep out the liquidity, when we sweep out the lows. And then what we get? We get an order block. Let me delete this right quick so you can see the order block. Remember, the best order blocks has a fair value gap in it also. Look at the order block. Look how we close. These two down bearish candles. So we get a sweep. So look at this. We get a sweep into a key zone, which was that fair value gap I just drawn, and the order block that I just drawn, and that breaker low. Oh shit! No wonder why this play ran so fucking much. The breaker low, high, lower, low, higher, high. This is the generated low. It runs a little bit just to generate the liquidity. Comes down, sweeping out this internal low into the key zone. And now look how we get the order block. Two down close candle. Look how it closes right here. This close gave everything right there. You got to close. That makes this the order block. So the order block is from where the opening price of the top candle extended through. Look how this candle opened. Remember, bearish candles open where? High or low? I'm sorry, bullish candle. Where do bullish candles open? High or low? Bullish candles open low. Good job. Look how this bullish candle opened. Where did it go? It didn't go up first. It never goes up first. Whenever it wants to go up, it never gonna go up first. It's gonna go down first. Look what it do. It opens and it goes down. Look how it look. I'm gonna extend it. This is why I draw the wick. Most sensitive part of the order block is from the top wick, opening price to the top wick, extend it through. This is called the OB's wick. Look how perfectly close. So look, close. This candle open came right down. Look how it comes down right to the opening price of the candlestick, and then it rallies. So that's your entry. Once it comes down, remember your entry always gonna be on a retest. Don teaches it once it leaves it, and then it creates the change in the state order block after. Maybe this is why I lose more than him. Who knows? But I be getting in. I get in when it does this. This is when I get in. When it go pickety, when it come in that bit. You see what I'm saying? But that's how you get in. Order block, retest, long. Stop loss. Long here, stop loss below. Targeting whatever liquidity you were targeting. And let's see if that bitch run into that motherfucker. TP. There you go right there. So we gave y'all a lot of sauce. We went on for an hour and 21 minutes. I just want to give a round of applause for Don Dada. That's what I'm saying. Appreciate you, Don. And any questions? Of course fucking not. I'm sorry. I'm fucking. Don't listen to me, bro. I'm an asshole. Don't listen to me. I'm an asshole, dog.